Transactions down 51% in 1 month. Developers are waiving off fees, giving cars and whatnot. Flippers who once thought that they'd make a killing on handover are slowly panicking. So, is the Dubai real estate finally crashing? My honest opinion, well, it's complicated. And anyone who gives you a straight up yes or no without the nuance is lying to you. Well, there are 100,000 brokers in Dubai, they kind of have to. Stick around because today we are going to break this down with actual numbers and no fluff. By the way, my marketing stint with the real estate company got over just before the war, and I have no horse in the race anymore. Before we get into what's happening today, let me give you a 30-second recap of what happened before. 2025 was the single strongest year in Dubai real estate history. 917 billion AED in transactions, over 270,000 deals. January 2026 alone clocked 72.4 billion AED, the best single month ever recorded. Then on February 28th, everything changed. Iranian missiles and drones entered the UAE space for the first time in modern history. The DFM, the stock market of Dubai, was closed for 2 trading sessions, and when it opened, the real estate index, depending on what you're tracking, was down 21 to 30%. And suddenly everyone was Googling, is the Dubai real estate market crashing? So let's look at the actual numbers and separate what's real and what's panic. Let me walk you through the numbers that I've been tracking. In the first half of March, property transactions fell to about 6,100 units from 8,200 the prior period, a 25% volume drop. Goldman Sachs reported transaction values collapsed 51% month on month in early March. Look at the 1 month data here, 11,762 transactions. That's a 34% drop from what we were seeing. But here's what the headlines aren't telling you. Think of it this way. When the stock market collapses by say a 10%, people don't start selling off their houses at discount, they hold it. The 3-month data tells a different story. It's up 15%, the rentals are holding at 7%, and that is better than any other city in the world, like a London and a New York hovers around 3.5%. 87% of all transactions in Dubai last year were cash transactions. This is very different to the 2008 era, where everyone was leveraged to the hilt. People love comparing this to the 2008. Let me shut that down with data. In 2008, prices fell 50 to 60%. Why? Because the market was built on speculation, leverage, and zero regulation. Buyers were flipping contracts before the ink dried. There was no escrow protection. The population was just 1.5 million. Today, the population is 3.5 million. RERA escrow protects all off-plan buyers. Bank lending is at 14% to real estate as compared to 20% back in 2008. 87% cash buyers as well. This is a completely different scenario as compared to a 2008. The Dubai market, Dubai as a city is way more mature today. Fitch said that there could be a correction of up to 15%. Moody's flagged oversupply risks. ValueStrat and Knight Frank project 5 to 8% price growth for 2026. Slower than the 18 to 22% that we saw last year, but still positive. This is a sentiment shock in a structurally sound market. Now the important nuance, where exactly does the pain lie? Even before the geopolitical situation, there was a ticking time bomb in the apartment market. Over 55,000 units are scheduled for handover in 2026 alone. Another 75,000 in 2027. Studios and 1-bedrooms make up 66% of that pipeline. Areas like JVC, Dubai South, Arjan, and parts of Business Bay are going to feel genuine oversupply pressure, not because of the Iran conflict, but because too many small apartments were launched during the 23-24 frenzy, and they are all coming due at the same time. And who bought all those properties? Investors who wanted to flip at handover. Here's the uncomfortable reality for those investors. The flipping game has narrowed sharply. The Financial Times noted Flipping accounted for roughly a third of resales at peak. It's dropped to around 20% as conditions tightened. The investors who bought off-plan in 2023 on a 1% monthly plan, expecting to resell at a profit at handover, may find a market that doesn't cooperate. That's the actual crack. Not a crash, but a painful reckoning for speculators in the wrong segment. Now let me tell you what the developers are actually doing. Damac just launched a Ramadan offer, 4% DLD waiver, that's about 40,000 saved on a 1 million property. Also waiving a 3% upfront discount on eligible units and, well, a guaranteed Nissan SUV for all residents. In fact, this scheme earlier was for only Emirati local people. UAE actually came out with a beautiful campaign. A lot of people here, about 80-90% of the entire population is actually expat population. And UAE said, hey, we are not here just to save our local population, everyone is a family here. And Damac doubled up on it and hence extended this offer to all residents here. These incentives do tell you one thing, that demand has softened enough that the developers are competing for buyers. Now here's the COVID comparison, because this is exactly what happened in 2020. During COVID, developers introduced post-handover payment plans where buyers could pay up to 50% of property value after completion. Emaar reported a 300% increase in transaction by 2021 once these plans kicked in. The market didn't crash, it restructured around buyer-friendly terms and came back stronger. That's the playbook they will run again. Right now you're seeing DLD waivers and cars. In the next 3 to 6 months, especially heading into summer, which is traditionally Dubai's slow season, expect to see more post-handover payment plans, lower down payments on select projects, 0.5 monthly installment schemes, and potentially outright price negotiations. So you're sitting there thinking, should I buy now? Well, here's my honest take. If you're an end user, someone who wants to live in the property, the next 60 to 90 days may offer negotiating leverage that won't exist in a recovered market. Motivated sellers do exist right now. Competition from other buyers has dropped. You can push harder on price, on payment plans, on DLD coverage. But be very careful on what you are buying. Don't buy a 1 BHK or a studio in JVC from an investment point of view. Yes, of course, if you want to live there for long, it makes sense. Or if you can hold for 5+ years, then it makes sense if you're getting some discounts. Otherwise, it might be risky to invest there right now. Focus on villas and townhouses. Supply there is genuinely scarce. Villa prices are up 65% since 2020. And unlike apartment, there's limited land to build more. The Palm, Emirates Hills, Dubai Hills, Arabian Ranches, these segments are holding. If you're a long-term investor of a 3 to 5 year horizon, the fundamentals haven't changed. 7% rental yield, 0 capital gains tax, 0 property tax, golden visa eligibility. These are structural advantages no market correction erases. And one thing, if geopolitical tensions ease out in Q2, you can expect a quick snapback. Every prior shock to this market, the 2003 Gulf War, COVID, the 2004 Iran-Israel escalation saw recovery. The data points say this is a pause, not a structural collapse. If you're a seller with a ready property, hold it. People are not selling at discounts right now. Do not panic sell at lower than market value. But if you're trying to sell because you're over leveraged or you need the cash, get realistic fast. The window where you could name any price is getting closed. Buyers have more options and more time. A 5 to 7% negotiation is now on the table. If you're someone who bought off-plan in 2022 to 2024 and planned to flip at handover, I'll be direct with you. This is the segment under most pressure. If you can sell before handover, especially in oversupplied districts, consider it. If the property is in a villa community or a prime location, you probably have more time. But if you're sitting in a 1 BHK in a peripheral apartment projects and 55,000 units are about to hand over, the math isn't looking good for your flip thesis. Yes, the stock market of Dubai developers fell by a 20-30%. I think Emaar was down 35% at the lowest. Aldar, which is the biggest Abu Dhabi developer, was down 40% from the peak. So yes, that segment was down. But you gotta realize that the stock market reacts to any and every news. The physical property market has not corrected. There aren't any distressed deals. The ones that you see in the market are actually at prices of 2025.